Welcome everyone to the top chart setup video for today, April 11th, 2022. We have a decent number of wave setups since the end of last week. First up is EBS, which was part of the Stock Waves webinar that we did 2 weeks ago, which covered biotech companies. It looks like a decent setup for a measured move C wave to the upside here off of the March low. That measured move fib targeted at 63.34 and a 1-2 start developing to that wave C of A. There is room to reach a little bit lower in wave 2 of the C wave. Right now price is testing the top end of standard retracement support, the 382 retrace at 41.49. So if price does need to stretch a little bit deeper, the 50% retrace at 40.42 and then the 618 retrace at 39.38 are the next support levels to watch. If you prefer a tighter stop, in this case, place it below the 786 retrace at 37.95. If you want to give it up to full invalidation, place the stop below the March low. Both offer good risk reward, looking for that measured move fib at 63.34 as the target. Moving on to CDNA, which was also part of our biotech webinar. That looks like a similar 1-2 off of the March low, a 1-2 start to a larger wave 1 in the potential beginning of this wave C of primary wave 3 and the bigger picture count shown here on the weekly chart. So larger 5 up from the March low would just complete wave 1 of C. Price is also sitting at the top end of retrace support here, similar to EBS, that 382 fib at 35.64 being tested. So if price needs to reach a little bit deeper into the standard support range, it has room for it. 50% retrace at 34.01 would be the next support, followed by the 618 retrace at 32.45. And similar situation here, if you prefer a tighter stop, it can be placed below the 786 retrace, which is at 30.35, or give it up to full invalidation, placing the stop below the March low. The rough estimated target for wave 3 depends on where the wave 2 completes, but estimation of that wave 3 targeting around the lower $60 region. Moving on to MRNA, which right now is being treated as a corrective B wave bounce off of the March low until proven otherwise, but there is the possibility that the pullback from the high that was made last year completed all of a primary wave 2. So if this develops into a larger 5-wave structure off of the March low, that would be supportive of the large degree bullish potential that we have a primary 1 and 2 in place. But even looking for just a measured move C wave to the upside and using a stop below the 764 retrace or below the March low offers good risk versus reward. Testing the 50% retrace currently on this pullback is either a B wave or wave 2. If it does need a little bit deeper, the 618 fib at 143.92 is the next support, and the 764 retrace, which you can place a stop below for a tighter stop, is at 135.12. Otherwise, give it more room up to full invalidation by placing the stop below the March low. And if price does hold around here to start the measured move C wave to the upside, looking at 233 currently as that measured move fib target. Next up is APPS, which is convincingly impulsive off of the March lows, what should be wave 1 of a larger wave 1 start to the intermediate degree wave 5 of primary wave 3, shown here on the daily chart, and has pulled back into the middle of the standard retracement support range, testing the 50% retrace at 38.11. If it does need to stretch a little bit deeper, the 618 retrace at 36.19 is the next support, and your choice of stops, if you want a tighter stop, can be placed below the 786 retrace at 33.61. Otherwise, give it more room up to full invalidation by placing the stop below the March low. And if price completed the wave 2 today, looking at 68 as the minimum expected target for wave 3. Moving on to VIPS. The large degree bullish potential here is a primary wave 1 and 2 going back to the 2018 low. The primary wave 2 did reach deeper than ideal, undercutting a 764 retrace, which was at 750, but it is so far holding a higher low compared to that 2018 low, which offers a interesting risk versus reward setup, because if this primary 1-2 is going to hold, then the March low needs to hold. So for that large degree bullish potential, attempting a long position on the current pullback and placing a stop below that March low isn't risking a whole lot if this is indeed a primary 1-2 and turning up in the start to a primary wave 3. But even if just setting up a measured move C wave to the upside, that also offers good risk versus reward, with price currently testing the 382 retrace top end of the standard target support for the pullback here as either a blue wave 2 or the red B wave, that 382 retrace at 791. Next support would be the 50% retrace at 745, followed by the 618 retrace at $7. And a tight stop can be placed below this 786 retrace at 642, or give it up to full invalidation, placing the stop below the March low. A measured move at the minimum for a C wave, the minimum expected upside, would be about 1250. If this is a 1-2 and turns up in a wave 3, looking at the $15 to $17 region as the expected target for that wave 3. Moving on to shop. Price tested the 618 retrace earlier today, is trying to curl up from that support. It also looks like a potential 5 waves up off of the March low, a nice 3-wave pullback into that 618 retrace. Definitely the ideal spot to hold is either a B, or 1-2 off of the March low. A break back above 670 is going to be the initial indication of that local bottom in place. And if price does turn up from here in at least a measured move C wave, that measured move fib target is at 883. If you want a tighter stop, it can be placed below the 764 retrace, which is at 560.15, but in this case I would recommend using the March low, placing a stop below there, considering that we have already pulled back to the 618 retrace, so even putting it below the March low, looking for just a measured move C wave to the upside, offers good risk versus reward. Moving on to TWLO, which has also pulled back into the 618 retrace, which was tested today, similar to shop, at 618 retrace at 141.37, and is trying to turn up from that support. A break above 157 in this case, evidence of a local bottom in place, and start to at least a measured move C wave, the measured move fib target in this case at 202.77. And even possible that this is a 1-2 off of the March low as a more bullish option, which would more likely head up into the 233 to 250 region. Choice of stops, tighter stop below the 764 retrace, but similar situation here. I would recommend placing it below the March low, give it up to full invalidation, even for a measured move C wave that offers good risk versus reward. 764 retrace, though, is at 134.07 if you want a tighter stop. And final chart for today is PayPal, which is a very convincing looking 5-wave structure to the upside off of the March low, and a nice corrective 3-wave flat off of the high that was made near the end of March. In this case, testing just the upper end of standard retracement support so far, the 382 fib at 110.09, so if it does need to reach a little bit deeper, there's room for it with the 50% retrace at 106.44 as the next support, followed by the 618 at 102.91. And choice of stops in this case, tighter stop below the 786 retrace at 98.08, or give it more room up to full invalidation by placing the stop below the March low. If a 1-2 off of the March low, rough estimated target for the wave 3 is in the upper $150 to upper $160 region. And even if just filling out a measured move C wave, that should take price up to at least 140. Alright, that's all I had for you guys today. See you again next time.